Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Gino, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbo. Gino, how's it going?
Mr. Stenziano, I'm doing good. How you doing, bro?
Doing great. Today is a special edition of the Wheelbarrow Profits Podcast. Guys, a big theme for us this year has been multifaceted multifamily. What that means to us is building a multifamily business, generating multiple streams of income. That's right, MSIs, by creating several businesses within the core business of owning apartment complexes. Gino, how about you tell the listeners about our most recent project and what could be our biggest addition yet?
Mr. Stenziano, the last 5 years have been quite a ride, bro. From an $87,000 investment to a $55 million plus portfolio, I am very excited to announce that we're about to break the 1,000-unit mark without syndication. Broseph, no syndication yet, Broseph. Since launching the podcast and book, we've had many reach out to us to inquire about the opportunity to partner alongside us in our deals. And for a long time, the answer has just been no. Here at RAM Partners, the investment team behind Jake and Gino, we're excited to announce we are opening the doors to share the wealth and bring in equity partners. This is a major milestone, as we know we'll be able to help a lot more people. There are many of our listeners that love the asset class, really want to be part, but just don't have the time to go sponsor a deal on their own. We also have plans in place for those who do want to be a sponsor to learn alongside us. We have detailed monthly updates each month for the first 12 months of our first few transactions, where we'll show exactly how we underwrite, take over, and manage each asset. This allows our equity partners to learn while they earn.
So first we had our investing business. Then we built our in-house property management. Then came the educational platform. And this brings us to round 4 of Multifaceted Multifamily. If you're a listener and you're interested in investing alongside us on our next deal, be sure to fill out our investor portal form on our website. You can get us at randpartners.com, randpartnersllc.com, or jakeandgino.com. And we'll have a team member reach out to you with a 10 to 15-minute introductory call. We're actively underwriting and pursuing deals all the time, looking for new opportunities for both accredited and sophisticated non-accredited investors. You can click on the link below in the show notes to invest with us, and be sure to register on our investor portal. If you have any questions or whatnot, we'll get back to you quickly, and we'll keep you posted on future deals. So, G-Dad, that's the future, Broseph.
That's the present and the future, Broseph.
That's the present and the future.
That's exciting, isn't it?
No, it's really cool. I'm excited to be finally opening it up, and I think it's going to create some great opportunities for folks. So let's get this podcast kicked off. We're talking about multifaceted multifamily. Let's take folks through our journey and get it kicked off with the investment piece, how it all started.
I don't know where to start with that, right? Because when you first start out, I think a lot of people on the call might be completely overwhelmed thinking how many businesses, how many companies you have going on. Guys, it only took us 5 years to get to this point. And a pizza guy and a drug rep really ain't that smart. I was a little entrepreneurial. Jake was W-2, but we were basically 2 W-2 guys floundering around and not knowing what to do. And I don't think this was the exit strategy for us, but I want you all to have an open mind, be radically open-minded throughout this whole entire call, and put yourself in our shoes and say, I can do it. They did it. I can do it. So let's start out with that 25-unit deal. We just wanted to get some passive income, some cash flow, right, Jake? What do we know about starting any kind of business? You know,
That was it.
The 25 units, we bought the property. We unknowingly created a second stream of income. We created a property management company, and it was just because we wanted to learn how to property manage the property. So Jake is running the day-to-day operations for the property management. He's making a nice rip on that. He's making a property management fee. All of a sudden, we're saying to ourselves, Jake can become financially free a lot quicker from the cash flow from the properties plus the property management fee. Plus, he's learning how to run the business. He's learning how to manage the manager if he eventually wants to go to third-party management. Fast forward 3 months later, after the first deal, we got our second deal. We bring on a partner. We got 2 investment opportunities, and we have a property management company that's humming along, probably generating $2,500 a month in management fees. We still have a resident manager. Fast forward 6 months, we got 136 units under contract and closed. Now all of a sudden, we think we're at paydirt, we're at nirvana. And looking back now, we haven't even gotten started yet with these revenue spokes, right, Jake? It's amazing. The property management company is starting to grow. We start actually becoming legitimate because we're having leasing agents. We're having maintenance guys full time. It's actually really super exciting. And at this point, I had this stupid idea to write a book. I don't know what possessed me to do that, but I always wanted to write. I was always writing for Gino's family. I love writing articles. I love writing blogs, and I was always by the notion that you learn, do, and teach. I learned by actively doing something. So by me writing a book and getting Jake on board, writing the book together, it made us become better investors. We became smarter. We started reaching out to people, and then all of a sudden, Jake says, "Why don't we start a podcast?" And I'm like, "Dude, how do I even log into a podcast? How do I even start one?" But
you never listened to a podcast at the time I said that. I know that's the truth.
It is. I have no idea what the heck a podcast was over 2 years ago. And I said, let's start it. What's the worst thing that can happen? And what I found was we started interviewing people in the beginning, and it was hard to get guys to interview. We started interviewing.
3 years in the podcast, buddy. Sorry to interrupt. It's been 3.
Sorry, bro. 3 years. Time flies, right? But so we started our the second part of the spokes a year after our first investment, and the education wasn't to monetize it, right, Jake? We just doing it because we like to do it. We wanted to give back. We wanted to create a little bit of a community, and what the education allowed us to do was the credibility. All of a sudden, we had a book written. We had a podcast. When a broker reached out to us, they started knowing who Jake and Gino was, and we were able to give them our book. The book detailed our entire investment. It's a really how-to book. It's only about 175 pages. There's a lot of meat in that book. We started growing a little following. The education portion and the podcast was awesome. We started interviewing these amazing thought leaders, and we started getting a lot of great advice. I always joke around to Jake. I learned how to syndicate the syndication portion of our business from listening to podcasters on our show, from interviewing them and asking them tons of questions. So I probably got a $30,000 education just from the podcast. That education was amazing, opened up our minds. It allowed us to build a big community. It allowed us to build an investor database. The next one is actually the syndication.
Gino, let me back up a little bit because we're missing a lot of key points here in the beginning that I want to highlight because, guys, so we're not just going over and saying, hey, look at all the businesses that we've created. I want to talk about a few of the things that make it so important and what it's really helped us out with. So we started. First and foremost, all of our properties are in individual holding companies. So we have separate LLCs for every different property we own. And there's various reasons for that. You can say, oh, that sounds a little expensive. There's guys you can reach out to if you ever want to think about doing series LLCs. We have our reasons. We like the way we're doing it. We're keeping everything in its own separate limited liability company. Then came along the property management company. One of the cool things about the property management company, Gina was talking about, doing the education, how we learn more about the business. We learned so much more about the intricate details about how our business runs so we could run it more effectively because we're doing it by having our own property management company. And it also lowered costs. So that's one of the great things. All these businesses that we're going to be talking about feed one another and have its own purpose. And it's almost like the circle of the business life where we're controlling the entire process, and it's vertical integration. So not only did the property management company make it more competitive for us on a pricing standpoint, we didn't get hit with these also, hey, it's 10% for this contractor fee. Hey, it's this upcharge, it's that upcharge. And we eliminated all that. So we lowered our operating costs by having a property management company in place. But what came along with that was some more headaches and some pain in the beginning because it was a struggle to build through that. But pushing through and coming out on the other side, it was definitely worth it. So it was the learning, it was the cost savings, and then as Gino alluded to, it was an additional revenue center built around the holding company. So you had the first one, you had the holding company. You had then off of that, you had the property management. And now we're into the education space where, wow, we were really just doing it as a book. Weren't think we were going to really hugely monetize on that, into the podcast. And now all of a sudden we have a very large following with some great folks in a great community, a great Facebook group where now it is, something that we're able to monetize, but also create new opportunities for other folks. So there was so much to unpackage there. I didn't want to jump too far ahead yet, but it's some great points for sure.
No, that's excellent. And what I think Jake alluded to also is the cost savings. I mean, all of these, when you're vertically integrated, you're able to control your entire business. So, and I don't think this would have been done without having a partner. I don't think I would have been able to do this without having different partners on the team, because everyone's like, oh, I want the whole pie to myself. I don't think I'd been able to do the education by myself and get on podcasts and schedule the stuff and run the property management. It's just not possible. But I think as you have partners, you're able to, able to gel and able to come up with these different ideas and able to push each other and able to create more stuff. And, this brings us to the syndication portion, where Jake and I never thought we were going to syndicate. We're struggling with that piece. And we're all on board. We've hired a new team member. We're going to start syndicating deals. We have a lot of investors from the education platform, and you see how they work. I call it a symbiotic relationship, because one feeds the other. Well, if you don't want education but you want to invest with us, great, we have it here. We're able to actually offer that opportunity to you. So as the list goes on and on, we're going to continue to do that. I know Jake is exploring to start a construction company. Maybe we can have a couple guys on a CapEx team take care of our in-house construction and maybe start building it from there.
Yeah, and it just goes back to how they're all feeding each other and creating opportunities. Before, we were just taking our own money, we were refi and rolling. We do a deal, we refi it, we put the money into the next deal. The interesting thing about the syndication is if a deal comes through and it's too big or whatever the case is, and we don't have the additional capital, we're still not going to pass on that. It's going to create an opportunity for more people, and we're going to be able to serve more folks through the syndication. So we're still going to do deals ourselves when it comes. We're going to still do the syndication deals, but we just don't want to limit ourselves. So we're opening more doors to more people, and we're going to be able to roll folks, that are in the education. If they want to invest in one of our deals, that's going to be an opportunity. We're creating more opportunities, which I think is a beautiful thing.
And Jake, I don't know if we mentioned it, but I know you want to open up the brokerage aspect of it, the brokerage arm of it, which is going to take a little while in the making. It's not going to happen today. That's why these things, when you start planning them out, I think everyone on the call, whatever business you're in, just draw a circle. I mean, I don't know if Jake doesn't mind if I share my
No, go ahead.
With the restaurant. With the restaurant, I mean, if that had been successful, my brother had allowed me to do it. Just think of whatever business you're in. Whatever business you're in, whether you're an insurance agent, whether you're a karate studio, whether you're a place that sells personal equipment, gym equipment. Me, for the restaurant, very simple. I had a brick and mortar business. From the brick and mortar business, you can start getting multiple layers. I created a catering company from it. I actually catered Jake's wedding. We did Jake's wedding from it. That was another revenue stream. Great wedding, right? We started doing barbecues in the summertime. We wanted to get a food truck. Food truck is another revenue source. If you're not in one location, start doing food trucks. They're huge now. From there, I wrote a cookbook, another source of revenue. From there, we started pizza sauce and pasta sauce that we got to get into jars, into stores, another form of revenue. We also wanted to do a educational video. So I created a company called Gino's Family that was symbiotic with the restaurant, with my family, doing cooking videos, selling stuff on YouTube. From there, I was doing a physical products company where I was selling garden bucket bags and garden shovels, and I was selling cooking knives, cutlery there. So you can see the list goes on and on. I think the thought's endless.
Not to mention the you have the rental at the restaurant. It's a mixed use place, so you have rentals coming off of that.
That's right. Yeah, I didn't even think of that. So, but I think, Jake, the point is what we're doing is we're not creating multiple streams of income where they're not symbiotic. We're not creating a car wash and a carpet cleaning. Those don't feed off each other. What we're talking about is things that are actually feeding off each other. I was thinking about it, even the gym experience. You go into a personal gym, you have the personal gym, you can sell vitamin supplements, you can sell personal training, you can be working with chiropractors, you can have a massage place, you can start selling education, you can start doing videos. The list goes on and on in everyone's business. And I think everyone should have an open mind about it, because we get stuck right now. And unfortunately, in this economy, if you don't have these multiple streams of income, you're not going to grow and you're not going to be able to pay the bills. And what you're doing is you're creating a personal brand. I think that's what the most important thing is. You want people to come back to you because there's so much advertising. There's so many eyeballs out there. If we can't service them with our investment arm, we want to be able to service them with the education arm. If the education can't help, I want to feed them over into the syndication. If syndication can't help, maybe they want to buy a property from us. If the property can't help, hey, listen, we've got a plumbing company who we can send out to you. If the plumbing company doesn't work, we've got a moving company who's going to actually be moving all our tenants in and out, and maybe the moving company can service other people. So I mean, just having that brand and being ubiquitous and being all over the place, I think is one of the most overlooked and one of the most powerful things about having these additional revenue streams.
So guys, it's two things. It's additional revenue streams. You're bringing in additional revenue streams while cutting costs. I think that's when you really see the snowball start rolling. And you hear the cliche stuff, oh, the average millionaire has 7 streams of income, this, that, and the other thing. We're going to be up over 20 streams of income here pretty soon. So maybe we'll start getting on that shoot for that billionaire status there, Gino. We'll keep the thing pushing, right?
Why don't you share with some of the revenue streams that we have in the multifamily? I think it's important.
Yeah, I mean, we've talked about it. We have, right now, I think we have 14 holding companies. We have the property management. We have the education. We have the syndication going right now. And then over the next 2 years, I'm going to be working on building out the brokerage. And the interesting thing about the brokerage is that we can go to you. It doesn't have to be, 30, 40 brokers. Maybe it's a handful, but we can go to you and say, hey, we'll buy your property, no commission. We'll compensate the broker directly. If not, we can sell that property for you. And then that can help feed the marketing dollars. And then, so we're either bringing in deals that we'll buy, or to keep the awareness and the marketing going, we'll let the broker sell that, get his commission, have some come in and grow that. So it's all feeding each other and paying for itself and creating these additional streams. So that's the idea with the brokerage company. And just a minute ago, Gino was talking about construction guys. We have a small construction crew. We're not out there developing or anything like that, but it's because we see what happens when you hire contractors. A lot of times you don't get service that you want. So we said, hey, we got to get some guys in house, start doing some of this workforce when there's a down unit, when there's something that there's gutters down, whatever the case may be. And the maintenance guys can't handle it. So it's all just about lowering those costs, creating additional revenue streams. So those are I would say our main 5 right now. Before we get into some of the other ones, there's additional, and that's the beautiful thing about multifamily is before we get into some of the additional companies, there's additional multiple streams of revenue coming in terms of cable contracts, cell phone, laundry. There's all these other little things that are coming to you that aren't maybe, they're businesses within a business. So they're multiple streams of income, but they're not necessarily you having to run a company because we partner with laundry providers. We partner with folks that do cell phone towers. We partner with guys that do these cable contracts. So that's the beautiful thing about multifamily. And I'm sure it's in other businesses as well, but you want to really talk about streams of income. They come through pouring in the multifamily space, and that's why we love it.
And it's funny that Jake says that. No, just a couple. I think, listen, in multifamily, the fees are great, right? We tack on fees, pet fees, we tack on applications. We even have renter's insurance where if you want to, you can make a little bit of money on selling renter's insurance to people. I think, covered parking is another one where, hey, if you want to start doing reserved or covered parking, it's becoming an amenity on a lot of places. If you have a fitness center and you want to give that as an amenity, or you want to have somebody teach yoga.
Rent it out to a yoga lady. Yeah.
Yeah. I mean, there's so many different things. Vending is not big on our list, but if you have 1,000 units like we do, and you want to partner up with somebody who has vending machines, let them throw them on your property, let them service it, and split the revenue 50-50, because vending is difficult. You need to have really massive properties, and you really need to work with Coke, and it's just a pain in the neck. But if somebody does have a vending machine company, hook up with them. Tell them to come on in. And what I like what Jake said is we're sharing the pie, because obviously you can go and have your own laundry machines, service them, take a maintenance guy to do it, collect the revenue, collect the quarters, make 100% of the revenue yourself. But it's a lot of work. I'd rather have somebody come in, give me new machines, clean the place up, give me a little upfront fee for doing it, and then have them service the machines and not worry about that. Keep that on automatic, because then I can go on to another business. So, and it keeps feeding it. I'm just trying to think of a couple others for multifamily. We have the, I would always love to, I mean, someone told us on a previous podcast that they have a moving truck where they actually leave on site, and they don't even, it's not even theirs. They let the tenants rent it out, and they get a percentage from the company that has the moving truck on site. I love that idea. We haven't implemented that yet, but I always think of it, Jake. Always try to think of services that you can provide to tenants that you have to provide to them, a great amenity. Let them pay for it, right? I think it's a great idea, right?
Listen, all these self-storage places are doing it, so there's no reason that we couldn't, right?
Yeah, exactly. I agree.
I think that's a very interesting one. I think there's guys in the syndication space right now that are doing software. So they're creating calculators and things like that. And that's an additional stream. So whatever, if you're a software guy and you know how to do software, well, you could do some code and create your own calculator and put that out there. It's also taking what you already know and what you're good at, applying it to the business that you're in. So I think that's, or maybe you're in the moving company business, dude. that's a layup right there. If you want to start, put a moving truck on there, or maybe you're in self-storage, you want to transition to multifamily, you understand some of that space.
Mm-hmm.
That's another one we didn't even really talk about. We rent out storage units. That's another stream of income that's not really our core business, but they're there, so we take advantage of it.
And I think people can, if there's a demand in your market, you can buy those prefab ones, $4,000, throw them on your property. And like I said, it's an amenity. It increases the NOI. And once they're there, they're there. If the tenant wants it, it's there. Another $100 a month per unit. It's another $1,100 a year in revenue for each one. And you're providing a great amenity. And Jake was talking about the software company. You create the software, all of a sudden you become a quote unquote expert. You consult people and they have deals, you have deal flow coming in. So it's all about being creative. I love that model where people actually go out and do the consulting. It's not really the consulting, but what leads up to the consulting. Because once you start connecting with other people, the brand gets to be a lot bigger. And I know there's one that Jake loves. I know he loves this, but we haven't done it yet, but we will do it. It's product sourcing. We're talking about sourcing products from China, and we haven't gotten to that yet. We will get there. So if anybody's listening on the call, we want to do it and get containers from China, bring them over, whether it's flooring, whether it's appliances, whether it's light fixtures, whether it's plumbing fixtures. When you get to the scale of 1,000 units, and you don't have to be that big, you can have a couple properties, buy stuff for you, and actually just create a company and start selling to other multifamily providers or start selling to mom and pops who want to save. I mean, if you're buying flooring for 10 or 15 cents a square foot and it costs you $1 here, you can sell it for 50 cents a square foot and still make money. So I love that because that's something that's core to your business. You're cutting on costs, and at the same time, you can create additional revenue from sourcing these products.
Here's a classic example. Say you're doing a Fannie Mae loan and you're going to do the green program. And they say, well, you got to come through with low flow toilets for everything. And you have 150 unit property. Don't you think it'd be interesting to get a quote on a full container from China on toilets?
Mm-hmm. Yep.
Dude,
I love that.
Think about it. Think if they're $50, right? Mm-hmm. You could save big money on that. So that's where we want to get to. We got right in the midst of doing the syndication right now. We got the brokerage coming on board, kind of right off the heels of that. We will get to the product sourcing at some point. We're just not there yet. It's in the pipeline, but I think that's a very interesting one. Another one that we've touched on that we haven't started implementing yet is trash valet. I think trash valet is very interesting. I think that, in some markets it's very prevalent. It's not as prevalent in our market right now, but I think over time it will be. So that's another one where you can make a nice little, additional fee and revenue generator.
But Jake, let me ask you a question with the trash valet. Obviously, it's probably more geared to the B and A assets. But when you start getting the customer to become used to that product, used to that service, it'll be a lot easier to sell. I think in the beginning, it's a lot more work. Maybe I can only charge $5 or $10, let's say, as opposed to charging the premium. But listen, when you have 1,000 units,
some of these guys are like $25 a month, I think.
It's big. But when you have even 100 units, you can have one maintenance guy. That's his job in the morning, going around collecting all that and then allocating the other time. And as you scale, you start adding employees. That one employee may be dedicated just to that service, and then he has a couple hours left in the day to do other stuff. So as you can see, it can be really massive. It's a great revenue generator, but you're also having to employ people that have jobs and can actually split time doing something else. So that's something we love to do. That's something that, you have somebody and he has extra time, and utilize them for that business and utilize them for whatever else.
Or do it similar to how you do the laundry, because there's companies out there that'll do it where you can just hire them if you don't want to do it yourself. And then maybe you do it with them for 5-10 years and you say, you know what, we're taking this in-house, like we did with Rubs.
So let me ask you about short-term rentals or vacation rentals in our space. Depending where a lot of people are, if you have multifamily units and you have studios or one beds, test the market. Go on Airbnb, go on VRBO, or start your own business and try to rent them short term. See what the break even is. Because I know in St. Augustine, it's a huge market down here for vacation rentals. So that might be another business generator. You have the property. We're in the Smoky Mountains, maybe for a little bit closer, or we're thinking about doing that. There are some units that we can allocate to short.
That's big up there.
Yeah. It's massive.
For sure.
So let me ask you a question. When did you think of this? I mean, I got the idea from a fellow investor down here about the name and how to brand it. But when did you come up with the idea like, wow, this is really, really happening?
In terms of, it's like everything we've done though, we've kind of just done it through experience, right? It wasn't, we, similar to our framework, buy right, manage right, and finance right. We've learned by do, right? We always learn by kind of what we do, because we thrust ourselves in and we just start doing it. So we went in, we bought the holding company, we bought the property, boom, it's there. Immediately from that, we started doing property management. A little bit later, we started education. This wasn't some like grand scheme or plan. It just happened, throughout what we were doing. And now this gives us the opportunity, rolling back to the education, to share this with folks and say, guys, there's really something here. And you can be in one business and have multiple streams of revenue coming off that business. People all the time, you hear these guru guys talking about MSIs, but they don't really say how to do it. They'll say, well, you know what? You should get passive income. Maybe you get a rental property. And then you know what you should do? Go out and get a vending machine. Gino was, referencing the other day how when we first got in, I was looking at all these different businesses because I was looking at ways that I could do my current job and then do other stuff. That's why I was looking at like healthy vending machines and stuff like that, which, we're not investing in obviously, but, fitness and various streams off the fitness stuff. But this is, look, have invested heavily into this. So it's our space. It lowers our overall operating costs and gives us additional revenue streams because look, real estate is the economy, right? There's so much of the economy that's based off real estate. So many people, get their living and are fed off this. So there's a lot of places you can touch, and we're just in one small space of it, the multifamily space. So.
And Jake, what I like about it more, I probably said this, but I want to stress this again. They completely feed off each other. Like We're starting the syndication company. The education has allowed us to actually feed our syndication business. It's given it a jump start, and the investment portion of it has given us the credibility about it. And the property management, which Jake, I guess, doesn't give enough credit. When we do a deal, people want to know who's managing your properties. That's the first thing with Fannie. Are you an in-house? So we have the property management company, so it gives us the credibility there. So it's like the whole package. So you can go into any other business, whether like the restaurant, let's say. Well, I mean, who's the food truck? You can have a regular food truck, but if you have a really successful restaurant and you have that food truck going out, you can service the food truck with the food from the restaurant. So it's a totally symbiotic relationship. And guys, that's what I want you to focus on when you're looking at multiple streams of income. How can you actually feed your original investment or your original business into those other revenue streams? And I think that's what's important. I think that's what we stumbled upon. We're like, wow, all these things are feeding off each other, and each one is making each other one stronger. So if the person syndicating, he wants a little education, I can provide him a little education on how we're syndicating. So it makes our investment look that much more smarter. It makes us much more transparent. So maybe it doesn't monetize it, but we'll be able to sign up more investors because they know we're teaching this stuff. They know what our strategy is because it's in our trainings. So it just makes us look that much more presentable. And I don't want to make it sound as if it's just like Jake and I talking about this, but I'm trying to put it through your eyes and how you can do it on your investments and on your end. Just take, for instance, a residential broker, Jake. You're a residential broker or a fix and flipper out there. You can have the same business model. You only have to shift your paradigm. Your fix and flips can be the core business. Start doing what we're doing. Start educating. Start lending out. Start getting a private lending company where you're lending money to other private guys who are fixing and flipping. Start doing the education. Start managing these properties. Maybe you keep a couple in-house where you're renting it out. Maybe you have the service companies where you have the construction companies that are feeding this fix and flip. So that one fix and flip can have multiple layers of revenue going on. I love the education portion of this because the education is going to do the same thing that we have. You're going to be able to get lenders coming on board. You're going to be able to get loans from this property. You're going to be able to find other deals from this property. And if you have the brokerage arm like we want to do, it's the same thing. It's just a different niche in real estate, but you're going to get the same exact results.
And if you're already in real estate, like Gino said, if you're a fix and flipper, if you are a broker, if you're any of these things, you're a property manager, whatever, we were nothing. Gino was doing pizzas and I was selling pharmaceuticals and vaccines. Okay. Mm-hmm. So we had nothing on you guys. So if you guys are already in the mix, you already got one spoke, add another one. I think that's the challenge of today because we started with nothing on this. We were able to grow it, very quickly. And I think we go back to this a lot of times. If we can do it, you guys out there can do it. It's all about taking action, get some offers in, get some deals under your belt and start, growing these additional streams out as you go. It's just, grow as you go, right?
So Jake, what I'd like everyone to do here when they're done with the podcast, to sit down, to think about their own personal business, to draw a wheel and to put the center, whatever business they're in, put their business in the middle. And you know what? It might sound crazy. You might have that limiting fear. If you feel sick or nauseous as you're doing it, you're on the right path because it is scary. It's fearful. It's hard to think of something that you've never done. Wow, how am I going to do this? Don't worry about how. Just put it down on paper and start putting down whatever additional revenue spokes you have. Yeah, and it's exciting because all of a sudden you see the possibilities and you're juiced. And that's why you've got to become part of a community and be with like-minded people that are going to support you and start thinking about how you're going to grow it. And I think you just take it one day at a time, one step at a time, one revenue spoke at a time. I think that's the other thing we did. We started with one, then we did the property manager, like Jake said, then we started the education, then we started the syndication. Now we're going to start the brokerage. So it's one layer at a time. And don't be afraid to find other guys who have the same vision as you, who want to work just as hard as you do, and who want to accomplish just as much as you do, and who want to create businesses just like you do. They're out there. Start looking for them. Go to meetups, find them, and then, to show them this, they're going to be like, how are you going to do that? Don't worry about how you're going to do it. Just figure out.
One step at a time.
Yep.
Guys, you don't start all this at once. Like, we have additional spokes or streams that we want to add down the road. It doesn't have to happen all at once. Get one under your belt, then add one more onto it, get that where it needs to be, or, just so it's functioning properly, then add another one. It doesn't have to be all at once. And like Gino said, it all works together, helps reduce costs, adds to the bottom line. So
if anybody wants to leave any, comments at the bottom of the podcast, please leave them. If you have any questions, I want you to hit me up at jakeandgino.com. That's my email. Go on our website. If you're looking for education, we have a link that says apply to work with us. Sign up, see if that's what you want to do. If you want to become more educated in the space is great. If you want to become an investor with us, just go on our website and click on invest with us. Sign up. We're going to have our team member reach out to you. See how all these things are symbiotic. We're just out there. We're offering the opportunity because right now there's a lot of opportunity in the space, and I think it's there. I think if you want to take it, you want to learn about it, or you want to invest alongside us and learn how to invest, I think that's what we're here for.
No, it's good, man. It's a lot to digest, but guys, one step at a time. That's all I can say. Don't get overwhelmed by it.
So, Mr. Stenziano, what else is up? What else is on the plate? What else you got going on?
I don't know. Check us out at rampartnersllc.com. See what we're doing there. If you wanna sign up, to get on our investor list, or just keep on rocking on, do your thing, and we wish you guys well. So
I'm going to end off with this. I want to see you all October 6th and 7th at the live event in Nashville. I think that's the next big step. Tickets are on sale right now. They're really affordable tickets. We're going to have between 300 and 400 people there. We had a really successful live event last year. We're going to follow up with one this year. There's another additional spoke, right?
Oh, you took the words right out of my mouth. I said, are you in the live event?
Sorry, bro. You know what? I saw you itching over there, but I said, I'm going to do it. And, the live event is self-serving for me because I love it because, listen, I didn't know what a podcast was. I never thought I'd be able to speak in front of two people. I mean, last year we did 175, and I think everyone got massive value from it. That's what we want. We're going to have our vendors there. We're going to have, great lineup of speakers there. It's going to be all multifamily. Jake structured it last year in a way, and I give him a ton of credit. He structured it in buy right, manage right, and finance right. We're going to have our managed team out there. We're going to have our managers out there teaching the stuff. We're not upselling anything. We want to teach you how to manage these properties. That's a vital, important piece. We have, Old Capital out there talking about the finance right portion. It's confusing, but when you listen to these guys, they make it real simple because they've got thousands of units. We're going to talk about the buy right portion.
Michael Becker, you just talked about Old Capital. Started in the lending space. Now as a syndicator, right?
Yep.
Doing all these different things. It's the same mentality, guys. If you're already in, if you already have 1 foot in, there's so much more you can do. Just know that.
That's right. So October 6th and 7th, that's on the website also. If you want a little coupon, Jake is always saying I'm giving away the house, but if you want a little coupon code, hit me up at jakeandgino.com. I'd love to share the wealth because I want you all out there because now is the time. It's only a couple months away. I think if you want to really get serious into the business, spend some money up front, invest in yourself, and you're going to really be happy that you did that.
Awesome. Gino, good stuff today.
Mr. Broseph, had a great call with you. I will see you later. Bye, guys.
All right. Thanks, man.
We trust that you enjoy the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.